Hey guys, it's Mike from Primate Trading. I just want to make a video about backtesting. I believe that backtesting and reviewing past sessions and screen time was one of the key ingredients for me to grow as a trader. I believe that no matter what level you're at or where you're at in your journey as a trader, I believe that backtesting and reviewing and screen time is a key ingredient that you need to incorporate um, in your daily routine. When I first started trading, I didn't have a strategy or an edge of my own. I just looked for strategies online and I just followed them step by step. But sure enough, it wasn't anything really repeatable. So while I continued to watch YouTube videos from experienced traders and being in this invested trade community, I learned that I needed to find my own strategy and my own edge to fit my own level of thinking, my own level of analyzing the market, and something that will fit my own personality. How I did this was hours and hours and hours a day backtesting and reviewing past sessions. I think I did about maybe 4 to 6, even maybe more months worth of backtesting. I the steps that I did for backtesting was I wanted to start off in segments. At first, I tried to find levels where price pretty much gravitated towards, um, pretty much on a daily basis. And then once I found that, I wanted to find something that would give me confirmation to enter a trade at those levels. And finally, I wanted to get a better understanding of market context. The first step, like I mentioned, was to find levels. I wanted to find levels where, like I mentioned, price would gravitate towards, um, pretty much on a daily basis. I wanted to see where and why price bounced pretty much at where it bounced at, or where it failed on a rally, or where it held on a dip. I wanted to find common areas of those levels on a repeatable process throughout the multiple days of backtesting. If I thought that those levels was gonna gravitate towards them, but after backtesting months worth of data, those prices really didn't occur, or that area that I looked at didn't really test often, then I would change my area of looking for levels. And if I changed that, then I redid all of the backtesting data to incorporate those new ways of finding those levels. Next, I wanted to find confirmation, something that would stick out for me to actually enter the trade when it was at the levels that I marked off. I wanted to find the characteristics of price, if it was going to respect that level. I wanted to find the characteristics of price if it's going to break, and notate what price did before it actually broke. I wanted to see what price did. I pretty much wanted to find a pattern where I could spot in real time, and when I see it, I won't hesitate to enter. So I just wanted to find those common patterns, the common confirmations. And in my past video, I pretty much explained in detail those confirmations that I like to look for. Now, I didn't find those combinations of confirmations right away. I found something and then I back tested it with those levels, with the confirmations. And if that confirmation didn't make any sense on a repeatable process, then I would tweak that and I would just redo the back testing all over again. Then finally, I wanted to understand market context. I would look at the higher time frame, work my way down, and understand the context of the current move. is the market making higher highs and higher lows? Is the market making lower lows? Is it moving sideways in a range? I just wanted to understand market context on a higher time frame down and be able to incorporate the levels and the confirmations to market context. And once I was able to find all the right combinations of everything I pretty much mentioned above, I was able to piece all of those pieces together into a puzzle that satisfied my level and my ability of thinking and to fit my own personality. Being in this invested trade community, I really learned that everyone has a different ability in reading the market. Everybody has a different literacy in understanding the market. So with knowing that, that is also one of the reasons why I needed to find a strategy and an edge of my own. I pretty much took pieces of the things I've learned throughout the years and I pieced them all together and back tested it, and it gave me a repeatable process on a day-to-day basis. And right now my strategy is almost pretty much a systematic approach. When price reaches this level, if it does this, then do that. So I like where I am right now, and I have to thank all of my hours of backtesting for me to be able to find that strategy and that edge for my level of thinking and for my own personality. Now, when I do backtesting, I clear the charts and I pretend that I'm going to trade that day. So I'll mark off my levels, and then I'll mark off my levels on a candlestick chart. Then I'll transfer those levels into my footprint chart. And then from there, I would annotate on the chart as to what price is doing and the characteristics of price when it's at the level. If it's going to break a level, I'll put questions on the chart. After I do that, I would simulate a possible trade, and then I would screenshot that chart, the footprint chart, and I would paste it onto my Google Sheets. And then above it, I would pretty much in words what the market did that day. I do that only because if I need to find something, I could just do a search. Like if I wanted to find level break, I would just type in level break and then it will give me my results, and then I could refer back to past back testing data to see what price did before it broke a level, or what the confirmations were when it broke a level, and maybe where was the retest if it broke a level. So doing writing the market structure in words really helped me to be able to use technology to refer back to what I need to refer back to. Now, this video is not necessarily about my strategy or anything like that. It's just about how I backtest. So I'm going to show you an example and we're going to flip over to the charts. Okay, so looking at the chart, I kind of cherry picked a day only because I have an example of the screenshot that I made for that day, and it's a pretty good one. So I picked the 8th, but the levels I used was for the 7th. If you look at my other videos in the past, I like to look at high a day, low a day, and somewhere in between, either resistance or support. But again, this video is not about my strategy. So I'll mark out the low of day at 35 and then this intraday resistance here at 91. And then I would pretty much go to my footprint and transfer those levels onto there. We have a low of day at 35, intraday resistance at 91. And then I would usually circle the market open footprint, which is We're at 8:30 here in Chicago. Eight 8:31. So I would circle this one here, market open. I typically don't trade pre-market times unless there's something that speaks out to me. But anyways, so market opens here. We have the low of day level here. So my first step for back testing is finding levels. We have a level here. We have a level at the intraday resistance. And my next step is looking for a confirmation for an entry. And my third step was market context. So understanding market context, we have a low of day, but there's no real displacement below the low of day. It got immediately brought up. So this is a pre-market session. So initially before the market open, I'm thinking, all right, maybe low of day is being held because there's no strong rejection below previous low of day. So we got market open. We have this low of day that was tested earlier, and now we're testing it again during regular trading session. So now what I would usually do is try to find why and where price would bounce here and how I would take this trade if I were to take a trade. Okay, so we have context. There's low of day here and price does not want to stay below low of day. So it tests, goes up. Now, does that mean price touches low of day and we get long right away or we get short right away? We have to find the why to get in to the trade. So as you can see here, something I would look at is, okay, price came here, price went up to here, and then there was a pullback. Now I would look left to see why there's a pullback. So it pulled back to the low of day, and maybe looking left we could see a large selling volume here, a large selling volume here at 35. So maybe if in real time sessions, if I see a level break below and reclaim, oh, I don't want to make a trade. If I see a level break below and reclaim, and if I see two red selling bars like this, maybe I'll take a trade long. So it's finding patterns like that to see where the pullback was, where the dip held, where is there a rally, what target makes sense. It's finding those patterns that is repeatable on a day-to-day basis. And in order to find that, you have to do extensive amounts of backtesting. And that's pretty much what I did. So maybe when you're trading real time and you see a setup like this, after a move up, a pullback into here, and it holds, maybe we'll take it long. And now in this type of condition, this type of scenario, we have a high right here. We could simply target here. Does it make sense to target this high? Not really, because of the risk and reward. So we want to try to find at least a 2-to-1 risk to reward ratio or better. And this high right here seems like a good target, since this price pretty much sellers were trying to defend the whole time during the market session, early market session. So might as well target where the opposing participants are at. Now let me show you the screenshot of when I reviewed January 8th. I have that low a day at 35, and I put this volume closed low, no low volume tail. What do? Do we wait for a retest after a move up? And if there is a retest, what am I looking for? And here we have this footprint shape. It closed high but no volume tail. I asked myself questions on these annotations, because when I refer back to it, I could just pretty much understand what this day and this type of situation did. So if I see maybe a footprint shape that closed high but didn't have a volume tail, and then I see something within these two large selling volume bars and it holds, maybe I'll take a trade here instead of here, and then I'll target this 51.75s. And if I did take this trade here at 36.75 to 51.75, that would be a 15 point reward for a 2.75 risk if my risk was at the top of this main zone here. So this is very similar to what I do. I would take this screenshot, I would put it on my Google Sheets, and then I would type up in words the market. For some reason, my Google Sheets is not loading right now, but just to give you an example, I would say context. Pre-market, there was a sell-off to yesterday's low of day, breaking below and reclaiming. At market open, price moved in between my two ranges and later on tested the low of day again and reclaimed. And then I probably would also put noticed two large red selling volume bars at the lows where price rallied from and pulled back into and held. Possible entry point to target next pivot point. That's something I would put on a Google sheet. So if I were to search low of day break and reclaim, it would probably bring up this day, and then I could find an example of what it looked like when it broke and reclaimed. So I'm not gonna give you any more examples. This video is long enough already, but that's pretty much all I do. I'll annotate on the charts. I'll look for a why did this hold and why did it pull back here, and then that way I could write it on my notes and I could look for similar confirmations if this were to happen in a live session. So that's pretty much all I have for you today. Just continue to backtest and spend as much time as you can on the screens, and just continue looking for those patterns. Look for that why should you enter. Look for that confirmation that's repeatable, that occurs often. Find a strong structure of where price will gravitate towards, and find those characteristics on what happens when price does break a level, or if price respects a level. What does price do? What does a footprint look like? I really love using a footprint because it gives you the behind the scenes of the candlestick. So just continue to put in those hours when you can, if time permits, and just continue finding those patterns. That's all I have for now. If there's any questions, comments, please put them below. And as always, please like and subscribe. Appreciate you guys.